It's a whole new framework. It's a whole new paradigm. It is the digitization of value and money.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Dan, thank you so much for joining me today. Super excited to chat with you. All right, Dan, you are the CEO and CIO of One Roundtable Partners, One RT, and also 10T, which is, primarily a crypto-focused growth equity firm, but you guys also do some other cool special situations, which we can talk about. You manage over $1 billion AUM, and you have a very extensive background in TradFi. You've worked at places like Tiger Management, SAC, Duquesne, and we can. I want to learn more because you've worked under the most legendary investors of all time: Julian Robertson, Cohen, Druckenmiller. So, how was it like? What was it like? Who was the best? Who'd you learn the most from? Tell me all about it.
Who is the best? They're all the best. Each one of them, I think, I learned something different from. Each one of them had their particular, skill or thing that made them outstanding. Again, I, was at those firms and I was an analyst there, or I managed money there. And in most cases worked very closely with the head, or was exposed to them. And so, for instance, I would say if you look at Julian Robertson, brilliant portfolio manager, I mean, I never saw anybody who had so much appetite for risk. So I would say, and I worked with, again, some, as you know, well-known guys, but no one quite had his capacity for risk, which was incredible. And Steve Cohen, obviously, one of the greatest traders of all time. I mean, some people would say the greatest in terms of, more shorter term trading and reading the nuances of the market. And I sat next to Steve for about 5 years. And again, I focused more on macro, so bonds, currencies, emerging markets, commodities. And there was a time, 10, 15 years ago, we're sitting together and we were running about $1 billion portfolio in macro together. And I had my own account. Of course, he had his own equity trading account. But I'll never forget, we did 19 trades in a row in the euro for profit. Now, I mean, the odds of that are just so low. It wasn't even a stock, right? And again, some trades we held for, a day or two, some we held for weeks, but to do 19 in a row for profit is just not, it's not normal. So Steve has incredible trading sense. Druckenmiller, look, clearly, one of the greatest, arguably the greatest, global macro investor / trader of all time. People would say probably with Soros, but certainly, of his generation and younger. I mean, Stan, just his tremendous vision and grasp of the macro and knows how to turn it into money. And I saw that on the front line there. It was pretty incredible. And I learned a huge amount from him. And also, I worked for him later in my career. I was about 38 at the time. So, I'd been 15 years in the macro hedge fund world, but I still question myself quite a bit. I questioned, was I doing this thing right or that thing right? But after working with Stan and seeing that a lot of the things that I looked at, he also looked at, the sort of indicators and the kind of analysis that he did, we had overlap. It just gave me tremendous confidence after that everything I've been doing, not everything, but a lot of it was, the right way. If Stan was doing it a certain way, then, and so that was a great, that was a great experience, because I felt like I really had validation. Steve was, more of an equity focused guy. So I didn't quite have the same validation as to my process. And also I'm a little more longer term thinking, and Stan I think is very capable in being able to trade on all the different time frames. I mean, he would have a short-term view, medium-term, long-term view, et cetera, all within a macro construct. So yeah, no, and then of course I also worked for Michael Steinhardt briefly before he retired, and he had his special skill set, which was honestly, I think he was very good at getting down to the essential point, the essential driver of any specific thesis. Like he would take in, I don't know, thousands of data points, and he would then be able to sort of express his view in 2 sentences, which was pretty incredible. So yeah, no, I had a very interesting.
But there was one more. I think you told me.
Child. I also managed money for Jacob. That was after I left Stan. I was managing some of Jacob's personal money, and he, of course, very eclectic investor, and was very interested and involved in a gold business that I'd started called GBI Gold Bullion International, which today is still very active, fourth largest seller and vaulter of physical gold in the world outside of the banking system. I have a little bit of it's a interesting background, because not only did I manage, portfolios live, but I also started at that time, during that period, 2 businesses from scratch. So I have that sort of entrepreneurial bent as well. The other business was Agcoa, and which I started with Druckenmiller, and we were partners in that business 7 years. And we built the largest private farmland REIT in the U.S., ended up selling that to the Canadian pension fund system 7 years later. And then actually just 3 years ago, Bill Gates's Cascade bought all those farms from the Canadians for $1 billion, and he became the largest landowner in the U.S. after that. But being a global macro investor, I've always shifted and moved around to where I saw the greatest asymmetry in the opportunity. So in the 90s, it was European bonds mostly, and some of the Asian currencies and other mispricings that were created by some of the dollar pegs. And then in the 2000s, it switched a little bit to commodities and gold, and China's entrance onto the scene in the early 2000s changed the supply-demand balances. And then for grains into the late 2000s, we had a massive bull market from around 06, all the way until, the early 2010s. So I was, again, shifted around, and then took off for quite a while, as I mentioned. And then in 2018-19, came back to investing, and started to focus on crypto and blockchain, which I believe is actually the single greatest global macro opportunity of all time, certainly bigger than any one opportunity that I invested in my career.
Wow.
The other ones don't really even compare, if I think about it. The RM crises in the early 90s, the Asian crisis, the NASDAQ bubble up and down. None of those really compare to what's happening in the growth of what I call broadly the digital asset ecosystem. So that's all I do now. I don't look at the old world much at all, except for when people ask me, and I'm certainly not as good or as informed as I used to be. But I still have a view, of course, maybe just not as informed. So I keep it to myself a little.
That's so incredible that you're saying that crypto, in your opinion, represents the largest opportunity. Because, going through your background, you've been, of course, worked for the incredible, the 5 probably best investors of all time. And then you were involved in commodities, tax liens.
5 of the top, people throw Warren Buffett in there and other sort of people, but we'll just call 5 of the top guys.
5 of the top. But commodities, tax liens, venture capital, farmland, gold bullion. And out of all those assets that you've been involved with, which is pretty much everything, crypto represents, in your opinion, the largest opportunity. Why is that? Do you think that the whole financial system is going to go on?
It's a whole new framework. It's a whole new paradigm. It is the digitization of value and money. So if you think about the internet in the early mid 90s, was really the digitization of information and ideas. And that blew my mind. I mean, that Netscape, when Netscape came out in 95, I can remember, spending hours and hours and hours surfing on that thing. I was a guy who'd been pretty academic, and, in my college days, I could spend a week looking for a book in the library, right? And all of a sudden now I had Netscape, boom, I could punch in an idea and the book was there or the idea was there. I mean, that was mind-boggling. And to me, that kicked off the whole, eventual, tech and internet boom. So I think this is, in terms of money and value, even bigger than that. Digitization of all value. So you figure there's $800 trillion of value out there. And now the digital asset ecosystem, as I calculated, probably has a value of around 5 trillion. When I had the idea for the first fund, in 2019, it was 300 billion in value. So the value of Bitcoin, the value of ETH, and the value of all the equity in the space was 300 billion. And I just thought, okay, well, we're going to have a 10-year life fund over the next 10 years. I think it can get to 10 trillion. So that's a 30x return. That's why we called the first fund 10T was 10 trillion, because I wanted to have my view emblazoned on the name of the fund, because I didn't think anyone else would believe me if I said, oh yeah, I called the 30x. So we'll put it in the name of the fund. And, today we're at 5 trillion. And I think over the next 10 years, we're probably heading to 50 trillion. And hence, I sort of adjusted the name for my fifth fund, which we're launching now, which is a much more complex, much more interesting version of some of the earlier funds. When you've been in the space for 5 years now, and again, I was introduced to Bitcoin in 2012, 13. So it's not, I just didn't get very involved in a deeper way until 2019, 18, 19. But I think 50T would put Bitcoin at 20 trillion. So that's a 10x from here. The altcoins, I think, can get to 10 trillion. And then I think all the equity and all the companies related to blockchain, Web3, et cetera, that's 20 trillion. So that adds up to 50T to me. And you're still less than 10% of the total value of assets out there, right? So I don't know how what's a bigger opportunity than that? I just don't.
Totally.
Interest rates going down 5 percentage points, or a currency moving 30%, or, I mean, these are all, a stock market doubling. These are all small things compared to what's happening in the digital world.
Absolutely. Will we see 100T from you one day?
I don't know. I don't know. Maybe I hope I'm alive for that. Hey,
Yeah.
it's not like I'm 32 anymore.
Totally.
Look, 50T is enough. we'll let the younger guys
Do 100T and 1,000T.
I don't know. Yeah.
Amazing. So, okay, your first fund was more so focused on growth equity, but you've since expanded your strategies into a number of different things. Can you talk about that evolution?
Well, yeah. I mean, in the beginning, I remember when I started talking to investors about the idea, and they said, well, Dan, okay, growth equity in crypto blockchain, it was a lot of explaining about even what Bitcoin was. I'd spend half the investor call talking about Bitcoin. But I really just wanted to own Coinbase in the private market. And I thought, well, okay, like it was difficult to do. And I thought, well, look at there are all these other interesting companies out there that are private that I think eventually are going to be in the S&P 500. Not tomorrow, but I think it's certainly possible over the next 10 years. And so I thought, all right, I'm going to build a portfolio, my personal money, some friends of mine will raise $100 million and we'll just put it to work, and I'll be happy. That'll be for that part of my portfolio. And that was really a simple idea, looking at companies making, more than 50 to 100 million in revenue. I didn't want to do venture. I didn't know much about venture, like early stage things. I didn't want to compete against the founder of Netscape, Andreessen. or Polychain or Paradigm or Parafine, any of those guys doing really deep in the weeds work, just was not, I was not going to be able to compete. So I was saying to myself, all right, well, we'll have less volatility. The portfolio isn't going to go down 80% every 3 years, like some of the venture funds and Bitcoin and ETH. And, maybe, we'll still be able to make a 5 to 10x return over the 10-year life of the fund, given that this is sort of what I think is the biggest macro structural change that I've ever seen. And so it was like, we'll accept, we want less volatility on the downside. We'll structure the portfolio that way, and we'll accept potentially less upside. We're not going to be shooting for 100x gains like some of the venture funds, et cetera. So that was my initial thought. It would just be, portfolio of 10 companies. And we own companies in the first fund that are sort of basic companies that Kraken, the second largest exchange, of course, and, eToro and Ledger, Deribit, Figure, Figment. These are all, the larger, more established revenue producing companies in the space. And the reason I didn't do tokens or crypto, it wasn't that I was against it, it was just simply that there were too many large traditional investors that were not allowed or were not interested in owning the tokens or cryptocurrency. I mean, for instance, I think at the time, you have pension funds like Texas Teachers who's invested with us and the Michigan Pension Fund MERS. I think legally they weren't allowed to own cryptocurrency. And a lot of investors, also traditional, don't own any currency at all. Like they don't own euro or yen. They just don't invest in currency. So I thought I'd just make it easy on myself and stick to the equity.
And for 50T, is that changing? Or are you sticking with the growth equity arena, or are you kind of branching out to some other opportunities?
The fourth fund we did under the One Roundtable Partners heading was focused on the secondary of some of the companies in this space. So secondary, but then also focused on operating one of the businesses that we bought out of bankruptcy. And so the skill set of the partners in the team now doesn't compare to the day one situation, where we've got, 5 partners and there's 6 analysts. And we also tap into the company that we operate is called Zenrock, and it does multi-party computation. It's developed a new decentralized MPC, which is sort of the next level of security after multi-sig. And next week, we're going to be releasing it's a decentralized wrap Bitcoin product for DeFi that will eventually be yield-bearing as well. And will be the only yield-bearing decentralized wrap Bitcoin. Yes, ZenBTC company Zenrock. One of my partners, Randy Little, is the CBO. And we have 15 blockchain developers and cryptographers who work for that company that we majority own between the third and fourth funds, and that we operate. The current partner, Randy, operates, and I have analysts as well. Actually, the whole team has been working on Zenrock, pretty much all, for the past year. And so the skill set that we've developed in operating that kind of deep in the weeds business. We have also launched our own token. We have Barack token. It just going through all of that process really has given us a ground up view of, the entire decentralized finance world. And so I think in 50T, we're going to have a bucket. 15% or so of the fund will go into what I call growth stage protocols. So protocols that are making, at least 50 to 100 million in revenue. Again, I think that are de-risked, that essentially they just don't have equity. The revenue accrues to the token holders, but that there's just no equity. So you need to own the tokens. And then we're going to have a bucket. 25% will be special situations, potential takeovers, credit. I mean, we're really, moving into, we'll launch another SPAC is my guess. We have a SPAC in the fourth fund. So there are quite a few credit opportunities, I think. I also want to reserve a chunk of capital for the next bear market. The fourth fund that we have invested mostly in 23 and 24, and we were able to buy things at like shocking discounts from distressed sellers, 70 to 90% discount. So I'd like to, hold back a chunk of capital from 50T. I won't call it probably for several years until we hit the next real bear phase. So it's more of I would say a full cycle investment fund. It looks a little bit more like a little bit, the structure of it is a little more like a traditional private equity fund where we do operate, we have board seats, we are involved in governance, and I mean, it's a lot to do. I told one of my other crypto buddies, portfolio managers, about all the different things that we're doing. And he said to me, "Oh my goodness, Dan, like, how do you like manage all of it?" And he says to me, "You're really," and I basically, I don't know. I'm at negative bandwidth all the time. And I think it's that way because right now we're really the only ones who have this focus. I suspect in the next 5 years, you're going to start to see some of the bigger, growth players and PE guys who are scared away from the markets in 21, by the way. I mean, FTX and Sam Bankman-Fried sort of he did do us a favor. I mean, it was terrible what he did, but, he really sucked in a lot of the traditional players. I'm thinking like Sequoia, but then you also have other ones like the Canadian Pensions and Tiger and Coatue and all these big investment funds that were beginning to dip their toe into the space. And he just blew them up. I mean, and so right now, there really aren't any growth investors. There's only one growth deal that's happened in the last sort of large growth deal in the last 2 years, which is the Phantom deal that happened a few weeks ago with Sequoia and Paradigm. And I think that was a $150 million deal. That was the first one. I don't know, Andrew, if you've seen more, but that was the first one I'd seen in a while because, the space blew itself up. It seems to shoot itself in the foot, every 2-3 years. But I think that might change now with the Trump administration. I mean, this is, at least from my perspective, the single most important development maybe in the history of crypto. I mean, I hate to say that. I mean, after of course, Satoshi white paper is number one. But like the fact that 6 months ago, we were all kind of under attack and my companies, the people were getting sued. And I mean, it was a terrible environment. And now all of a sudden, last week we had a few of our CEOs down at the White House meeting with Trump at that meeting. There's an SEC crypto task force. The SEC chairman, finally, who's going to be coming in is pro-crypto, the vice president and Bessent and all sorts of other people in the administration, in the cabinet are pro-crypto. So I think, Trump has said he'd like the U.S. to become the crypto hub of the world, crypto blockchain hub. I mean, it's an incredible statement from the richest, most important country in the world. The other places around the world are nowhere close. Asia, Europe, they're going to be left behind. The bureaucracy in Europe is insane. Like, I think the U.S. now really can become the dominant player. I really do think so. And, you haven't stopped me and you let me sort of keep going on and on. So I'll say one more thing, which is that I know this is speaking a little bit of my own self-interest given our 23 investments in these larger companies. But I think the way the U.S. becomes the blockchain crypto hub of the world is somehow for the administration or the SEC or whoever it is to put the word out there, whether it's NASDAQ or NYSE, that we need to start bringing some of these private companies in the space public. Really, today, there's only one large crypto blockchain public company, and that's Coinbase.
Great.
That's it. And for a space that's growing as it is, that has the support in DC, that has as many companies making as much money as they are, I really think we're going to be entering an IPO SPAC boom for our space. I mean, again, I hope that is what they meant by creating a global hub. I think it's a lot easier for people to understand that and to get to understand, why cryptocurrency is so important, why some of these companies that are building the space, this whole digital asset space, are so important, if they can own some of the equity. And like, I think maybe on a 10-year plus view, maybe more things become tokenized. Maybe all equity ends up on a blockchain. I think, as I said before, all value ends up on a blockchain, but that's not going to happen tomorrow. It really isn't. I think that an easy way for the US to establish itself is to get 20, 30, 40 of these companies public so that the American investor can invest in them and provide them capital, because right now I don't see who in the growth space is going to do it.
Well, what's stopping the IPOs? I agree with you that change of administration couldn't have come at a better time. We were kind of, people were pretty bearish, and our friends were going to prison and getting sued, and it was pretty crazy, getting debanked, of course. And to have such a switch in kind of the view on this industry has been amazing. But we haven't seen the IPOs that I would imagine. Sure, it's only been a few months or whatnot, but when do you think?
I mean, it's coming. I think, you've had companies announce that they were looking into it or that they intended to IPO. You have Circle and eToro and Figure, and there's been rumors about Gemini, Kraken in Q1. There was just a story last week. Now I can't, confirm or deny it. I don't have it. I don't know, but there's a lot of noise. Those are 5 companies right there. I think there's been talk about Ripple as well. So I think it's, I think it's time. That's how you become the global hub. Yes, it's great to encourage developers to come and, develop new L1s or L2s or whatever it is. But I don't think you become the global hub because you've got some developer, tweaking the Bitcoin code, and, people aren't going to be able to understand, deciphering why the code makes one chain better or different than another. It's just too complex. It's too in the weeds. The way that you get adoption pushing forward, the ETF was a great move, and Larry Fink's change on that was very important in the summer of 23. The ETFs have been wildly successful. But now that if you own Bitcoin and you own a little ETH, I think American investors want to own businesses. They want to own companies that are cash flowing, that are building things, that are making money, that have a moat around their business. And again, it's self-interest, but this is all we do. But I just can't believe that, we only have one representative really in the public markets. Galaxy is there too, but that's smaller, and it's on the Canadian exchange. Eventually like a 98, 99 IPO tech boom thing,
Hope you're right.
Well, I don't want to have the mania, and then the mania, have companies come out at 100 times revenues or something. That doesn't do anybody any good. And then the bust, of course, crushed tech for 10 years. So we don't want that. But, more than one would be nice, right?
Totally. So early on, being growth equity, the conversations with LPs was pretty straightforward. It's like, hey, there's these great companies here generating cash, et cetera, et cetera. Now you guys are the kind of this full stack firm. How are the conversations with LPs going with that?
The full stack firm.
Well, it's a different multitude of different investment strategies, or you have optionality versus just being solid into growth equity. So how are the conversations more difficult? Are they easier because people know crypto, or how's that been going?
Yeah, well, it depends when you're having your conversations. I think having conversations in 21 was easier than having conversations in 23. In 23, I spent a lot of time talking about SBF, we passed on FTX 3 times. So, I spent a lot of time talking about all the companies we passed on. So people weren't necessarily in the mood. I think things started to change again with the ETF in 24, but now it's completely different. Trump has been very clear. It's in the news every day. I think that people actually want a little exposure to some of these growth stage protocols. They have no idea, I'm talking, ones that we know, Aave, Radium. We're not talking about tiny little tokens that are worth $100 million. And also we have a long-term outlook. We do a lot of research. I don't know how many fundamentally based crypto token, 5 to 10 year holders there are out there, right? Like I want to hold these things for 5 to 8 years. We have a very sort of rigorous valuation methodology and process. A lot of that was learned from actually constructing our own token, the rock token for Zenron. So we've just, if you're not learning and growing in this space, you're dying. I mean, it's a little bit of a platitude, but it's really true. And we also give LPs they can opt out of the token bucket if they want to, right? But the special situations bucket is also very interesting. Like that's an ability for us to really generate independent alpha, which we couldn't have done in the beginning. The first few funds, it was sort of very basic. I just want to get some exposure on to the space for myself and for, my friends and network and people who, we got into the funds. So it's very, very different.
And looking forward, do you have a sector focus? Are you thinking about prime brokerage and custody and more the financial oriented use cases? Or are you more open to whatever you see that's great?
Yeah, it's the latter. I mean, we have a map of the digital asset ecosystem, as I call it. And within that, there are probably 10 sectors. And then within those 10, after those 10 sectors, there are 100 subsectors. And so we have a map of the entire world, and it ranges from, RWAs and NFTs to stable coins to DeFi to infrastructure to security to L2s to the Bitcoin universe, everything. And we want to build a portfolio that's leveraged to as many of those areas as possible. And we're really looking for quality businesses and quality projects that we can buy at reasonable valuations. I tend not to pay more than 10 times revenue for anything. And as a result, that really saved us during the bear market in 23, 24, because we passed on companies we love. Like we love Fireblocks, but we couldn't invest in Fireblocks at 50 times revenue. Alchemy is something we really like, but at 100 times revenue, where Silver Lake invested, it's just our LPs are never going to make any money at those multiples. So, it's kind of funny because I have like a value oriented bias within like the fastest growing space of all time kind of thing. It's a very weird thing. And that helped us. As I said, during the bear phases, the portfolio held in well. If we'd invested in OpenSea at $13 billion valuation, the portfolio would have been crushed, right? Or that position. I mean, it's probably trading at less than $1 billion market value now. So again, we do a lot of diligence, a lot of research, a lot of investment memo writing. Our process now, we're just applying to new areas within the world that we invest in.
Very cool.